Here are 5 tips for avoiding common mistakes when trading crypto. Chasing FOMO, fear of missing out. Jumping into trades based on hype or fear of missing out on potential gains can lead to emotional decisions, causing you to buy at the peak and sell at the bottom. Top traders understand that emotional trading rarely leads to success. Develop a strategy and stick to it. Don't let the noise in the market dictate your actions. Instead, evaluate the market based on technical analysis and fundamentals, not market sentiment. If you miss a big move, don't chase it. There will always be more opportunities. Neglecting proper risk management. Not setting stop losses or over-leveraging can result in huge losses. A lot of new traders think they can ride out a downturn, only to see their capital evaporate. A seasoned trader never risks more than they can afford to lose on a single trade. Use stop-loss orders to cap your potential losses and determine your position size based on your total portfolio. Diversifying your portfolio also helps minimize the risk associated with any single asset. Overtrading and lack of patience. Trying to trade too frequently or micromanage every market move often leads to unnecessary losses, especially when the market is volatile. Great traders are patient. They wait for the right setups and trade with a plan. Avoid day trading out of boredom or trying to make every move into a profit. Remember, not every price movement needs to be acted upon. Sometimes the best move is no move at all. Set long-term goals and use technical indicators to guide your trades. Ignoring the bigger picture, macroeconomics and market trends. Focusing too narrowly on short-term price movements without considering broader market trends or global economic factors can cause you to misinterpret signals or miss major market shifts. Keep an eye on macroeconomic factors like interest rates, regulatory news, and global sentiment as they heavily influence crypto markets. A top trader doesn't just focus on the coin they're trading, they understand the entire market ecosystem. Stay informed about broader economic trends and always look at long-term charts to spot macro trends that could affect your positions. Overconfidence and ignoring technical analysis. Overestimating your abilities, based on a few wins or relying on gut feelings instead of proven strategies, can quickly lead to mistakes. Never stop learning. Use technical analysis to identify market trends, support and resistance levels, and potential breakout points. Don't trade based on gut feelings or past successes. Even top traders make mistakes, but they learn from them and refine their strategies. Always back your trades with solid research, whether it's charts, indicators, or market news. If you would like to learn more, follow the link in the description right now.